Hello investors and traders, and today will be the stock market update. And let's start with the S&P 500 index. We can see that we are continue to be traded at a declining channel, and now we are down more than 20% since the beginning of the year. And let's have a look on this picture. We can see that just 7 trading days left until the end of June, and the index is down 21% since the beginning of the year, amid expectations that a toxic mix of high inflation and a hawkish Federal Reserve will tip the US economy into recession. The last time the S&P 500 had fallen this much during the first 6 months of the year was 1970. A 1970s style inflation shock could send the index crashing about 33% from the current levels amid stagflation with higher inflation. The key read across from the 1970 is the risk that if investors start to believe that inflation will stay high for longer, equity markets begin to focus on real instead of nominal earning per share rate, which for this year is likely to be negative. So the S&P performance this year is not so impressive for its high level, now more than 30%, and as I see here, the key support level is about 10,080. If we will break this level, so it's very bad sign, very bad signal to the market. We could fall much lower, but now the RSI indicator, the momentum, we can see that we already oversold. It's a weekly time frame, so from these levels I think it's very possible to see little bounce from these levels. And the new index for today is Russell 2000. It's the small cap companies. We can see that now please have a look. We are trading at the levels before the COVID crisis. Also now it's the levels of 2018, 2019. So here now it's a key support level. If it will broken, so it's very awful, and I hope it won't happen, because I'm holding a lot of small cap stocks. So I guess I hope it won't fall down. But here I see a horizontal cluster here at the level of 153. So I think that there is probability that it could fall another 8%, but as I told previously, now we are trading at a very strong and key support level for last 4 years. So now it's very important level. The next one is oil price. Here let's have a look on the chart. There are a few interesting things here. The first one is for a second week in a row we have a correction where the price of oil is decreasing, and it's not a bad sign, because if the price of oil will fall, so the inflation in the US will fall. Now we know that there is a spike of inflation in the US. It's year to year is more than 8%, so it's a big issue. The amount of oil, of natural resources in the inflation is significant, so for the inflation to come down, we supposed to see fall in energy, in natural gas, in oil. So I hope we can start the correction from here, and the key support level here is 100. So if we'll break this level, so then we can see a very strong correction in oil. It can be more than no, it can be about 40%, but before have to try this level to trade it, to broke it, and then everything is possible. But the US Treasury see 10 years yield, we can see that it's still trading above 3%. It's relatively high. So before we would see that this yield is also beginning to decrease. The inflation also won't start also decreasing. So we'll see and we'll hope that this curve is in the near weeks at least to come back to this decreasing channel, and I would like to see the yield of the treasury bonds less than 3%. And let's have a look on few interesting stocks from my point of view. The first one is Zoom, and now Zoom is traded at a level of 115. As I see, we can see a classical ABC move, and now the wave C is in my mind is most probably are finishing. So what we can see here, we saw a very good sign that check it, it was a declining channel, and now we're breaking this channel from the top, and I hope that from here there is a huge potential and a good probability to start for this stock to rise. Also now we are trading at a support level. It's this support level is no, it's currently price, it's about 100. Here we can see that it was a support level, a resistance level. Zoom is one of my top holding in my portfolio. Also we can see that now it's down more than 80% from its high levels. So as for me, I think the Zoom has a very huge potential and may show a very nice performance for this year. For example, if we're now trading at 100, it can be 200, it's 1x. So if you like this video, press the like button and subscribe onto my channel.